Good, everyone. So trading day's over. I've probably finished, I don't know, like 6 hours ago, 5 hours ago or so. We took, I'm not even too sure, maybe 5 trades in total. Overall, pretty decent day. I'm nothing to complain about. So I'm just going to go over the trades I took real quick. So first trade I took, you can see that I entered here. And there's quite a bit of boxes around here. So I'll kind of go over that for a little bit first, I guess. So we can see that there is a box here, and there's 2 orange boxes and a blue box inside. So first I'll just get rid of this box. And that orange box is just based off the 55. So we're just in a retracement area on the 233R. So we get that swing low, that swing high here. Let me draw it out for you. So swing high, swing low, then we get that tiny high and that tiny low. So we were able to get that confirmed close to the upside. And I'm telling you, I just wait for price to kind of come back into this orange zone. And you can see it does, but we don't get a confirmation candle to the upside for a potential entry. So I was like, all right, cool, whatever. But at the same time, we were also in a retracement area on the 144 time frame. So then we look at the 34R. You can see right here, you can see we have our model. We have that tiny high, or not the tiny high, but the swing high and then the swing low, followed by the tiny high and the tiny low. It's just the same thing on repeat. Like I'm telling you, I'm literally giving you free money making option right here. Like it's so good. Just wait for that tiny high, tiny low, movement continue to the downside. We get that right here. Wait for price to kind of retrace back into this zone, which it does right here, and you can see that I enter right there. And it's just honestly as simple as that. And you can see price does keep on moving to the downside, which is good, and it just bounces up from where I have this low volume node, and look, price just kind of respects that low volume node and just goes back up. It's really not that hard, honestly. Just keep looking at the charts consistently, and you'll be able to see what I see easily. But yeah, so that was the first entry I took. And you can see that I did take another entry here, but that's because if we go on the 55, we were also in a retracement area on the 233 in this area. So you can see that we get a swing high. Wait a sec. I confused myself a little bit. Why did I enter there? Let's review. So entered here. Oh, yeah. So the reason for my entry right here is just because on the 55, we were able to kind of close outside of this zone right here from these 2 consecutive up close candles followed by 3 down close candles. We were able to close below here, but also this zone that I just drew out was a part of the old zone that filled. So this orange zone is the zone that I was looking to hold. So I wanted price to kind of bounce up from there, but instead what we got was just a break like straight down. So I kind of just wait for price to kind of come back into the zone that broke the original zone I was looking for, if that makes any sense. So like this new zone, these 2 up close candles followed by these 4 down close candles is the new zone that I'm looking at that broke my original zone entry, which is this orange zone right here. It did not follow it, so I was like, okay, we get a price reach into here. Let's switch this back to orange. So if we get a price retracement back into here and we have continuation to the downside, I'm going short. So what did I do? Literally just that. We pushed back in, We come out, I enter. Yes, it was a little bit of a sus entry because, the low volume node is right there and we do kind of bounce, from it. But I was kind of targeting like the very lowest point in the low volume node. And it was somewhere like around down here, maybe a little bit lower actually, somewhere down here. But unfortunately it didn't hit perfectly. So you do see that I get stopped out here in a little bit of profit. But if I had just went for my 10 points, my entry was at 26,045. So if I went for my 10 points, I would have gotten filled out right here. But also if I just kind of stuck with my original method of once I'm in 5 points, I kind of go to break even, I would have gotten stopped at a break even and I would have been fine with that as well. So those were the two trades I kind of took this morning. The first trade was just one account. And then the other trade was on 2 accounts. And I did take like a couple more trades just on my take profit account, or take profit accounts, I should say. Just because I wanted to try to pass the evaluation account quicker. So I only need like $1,000 more. We did start this account about a week ago or so, like the 23rd, 22nd, so almost a week ago. So yeah, just need $1,000 more in profit for these 2 accounts. So I should hit that relatively soon. But I took an entry here and I did get stopped out right here just before it kind of bounced up. And it's the same thing as I've just been showing you guys. Like, you go into a retracement area, you hit that 50% retracement, then you just look for continuation to either the upside or the downside, whichever way you're kind of favoring. And once you kind of see that, you enter. It's just simple market structure shift, breaker structure. It's just very simple stuff, I would say. I mean, it sounds simple, but in reality, it's like a little bit harder in practice for sure. But I like using these range bar charts just because it's a lot cleaner than using minute charts or tick charts. With range bar charts, I know exactly how many points I would be getting, how many points I'm risking. The risk tends to stay the same. But if I was to go to like a minute bar chart or a tick chart, my risk could be anywhere from like 50 points to like 10 points. So it's not the same, and I don't like that. So I'd rather use range bar charts for sure. But yeah, so I do take my entry there because on that 55, once we're in that retracing area, you can see that I do take an entry there. Unfortunately, I get filled in like up here at 124, and this candle closes at like 120. So, that's 4 points, and I probably would have gotten stopped at a break even because price did go up to here, but it's not always perfect entry. But to me, in my head, I was thinking I'd move my stop loss to here, to 103, instead of keeping it down here at 95, for the sole purpose of us closing below this level. Once we close below this green candle, I definitely do not want to be in. I want to be out, and I'm fine getting stopped out. It minimizes my risk, for sure, and I was just kind of waiting to see if we retraced back into this zone and we were able to kind of bounce down, or not bounce down, but like have a retracement to the downside. But obviously we don't get that at all. So I was like, okay. So it was like a fake within a fake. So this orange is the original idea. We enter off this green candle and we're looking for at least a break of this high, I would say, for sure. We do eventually get that, but that's what we're looking for, break of this high, and we don't get that. So I was like, okay, I get stopped out, let me switch my bias, and if price does start rejecting price and go more to the downside, then I will, I'll hop in. But instead it just did another fake out, and it closed, instead of respecting that zone I had, it now is respecting this zone. So once I saw that, and once we got this candle close above here, I was like, okay, you know what? we're definitely going to be going up to the upside because we have our original zone in this orange box, because this is our swing high right here. From here, this is our swing low. Tiny high, tiny low. Now we are back in this zone and we are able to form another demand zone or an order block, whatever you like to call it. I'll call it maybe an order block, it's just easier. So we get another order block within this demand zone. So to me, that screams like, yo, enter, like we're gonna be going long. And I would just probably like to target like, 1-to-1 of this order block. And you can see we just kill that. We get all the way to -4 before we see any retracement to the downside. But you can see that I do get stopped out here for a loss, but then I re-enter and then I just take a quick sell, very quick sell, but then I re-enter once price kind of comes back down here. And then it's just like re-enter, exit, re-enter, exit, just for like the quick snipes. And you can see that I did enter here, but then once I saw how price was moving on the 89R and the 21R, I saw my model entry on the 21R comparison with the 89R. So it's just the same thing. Like that's the reason why I entered, because I believe that the market's fractal. And what that means is what happens on one time frame happens on the other. So if we look at the 21 right here in this area, we can see that, let's see. So we can see that I have a line drawn here. So this line was pretty much telling me like, we need price to kind of close over here in order for my long position to be valid. But what first got to me was this uptrend right here is an 89R candle. I'm just making sure. Yeah. So this uptrend is an 89R candle, and this downtrend is an 89R candle as well. So from this 89R low closed up somewhere around here, we get that retracement, and it's the same exact thing what we've been looking for, just on a different time frame. We have that swing high and we have that swing low. Now what we do is look for the tiny high right here and a tiny low, and with the confirmed breakout, it's literally this zone. I'll put it in a different color just so it makes it a little bit more noticeable. What's this one? Yellow. We'll do yellow. So look at that. We get that confirmed breakout. Tiny high, tiny low. It's the same thing over and over again. Then we get that retracement back in. And you can see I did take an earlier entry here just because this was the close on the 55R candle, which is the original zone we were respecting. But then I just look on the other time frame with the 21R with relation to the 89R, just to see if I can get another contract added to my position, and I can move my stop loss accordingly as well. So I see that we get this set up. So instead of having my stop loss all the way down here, I move my stop loss 20 points up to here, and that saves me 20 points, which is $400 at least, which is, it's $400 per contract. So I'm more than fine with that to minimizing my risk. So we have that entry here, and then I see this form, take another entry right here as we get that bounce, and my stop loss is just below here, and you can see that price still respected my stop loss. I was fairly close to getting stopped out for sure, but ultimately it bounced back up. And the reason why I needed this candle to be able to close above this high, it's just because this is like an order block within this zone. And the order block is pretty much from this high. You can also see it from like this high as well to there, or this low. This region is your order block. So any close above here is a great close, and I have great confidence that once price is able to kind of come back into this region and, you know, have a bounce, price is just going to go skyrocketing, which it ultimately does. And this is literally just my model to the T. Like, yeah, you're going to have some losses, but the winners outweigh the losses a bunch. So, like, it's literally just a free copy for you. Like, it's so good. But yeah, so those were my trades for the day. This is how we ended on the day. Nothing too bad, nothing too crazy, I would say. Just like, you know, just your simple, quick scalps. This My Funded Future one. Only need like maybe 3 more days before we go live. Yeah, I did have that bad one day where it was like 1,000 plus loss, but you know, you're gonna have those days, especially with some funded accounts. But then again, I'm kind of restarting the journey to show everyone that, you know, you can properly scale accounts and make a living off of it. But yeah, you know, this is pretty much it. With that being said, just follow your model and trust the system. Peace.